Hello, hello, hello. How's everybody doing? Hope everybody's having a great Memorial Day weekend. This is 50 Pips rocking and rolling here on the 30th of May 2016. No trade calls, no recommendations. Everybody's responsible for their own stuff, and the fact they're in here means you're ready to understand. You accept all the disclosures, understanding that we're just doing this for educational purpose only. So let's get cracking. Let's look at some charts. So what's happening? ES, slow grinds continuing. We talked about the range. Basically 2000, 2050, 2100. We kept on saying that we felt that we had to fail from a higher level. We said we don't believe in shampoo bottle patterns, and the fact that on any break here we were very interested at the nice support that these two moving averages was giving with extra base at the 2100, and this was the ideal place for it to base to launch back higher and decent move here. So again, in the slow market last week, we've had extremely low volume. Pretty much all the moves have been gap ups in the overnight session. So, very tricky to trade this kind of market, not something you really want to step into. So right here, I mean, we have to wait for the vols to come in. So it clearly still looks like it's trying to fail from a higher level. Something you have to respect and you have to pay attention to are all these aggressive failures we've had in the past from these levels, right? So you can't discount this, you can't close your eyes and say we're going to a gazillion. Now, one thing we would say is just again, pivotal level, daily closes above the 2100, bid for a move back higher to print new highs. Daily closes below the 2100, heavy for a move back into this trend line, which is likely going to be the key for the next move higher or then for a bigger reversal down. So these are all the levels to keep an eye out for. I'd be very, very careful about being too stubborn on this, but again, we'll have to see how we trade. I still think if you're trying to be patient and build a bigger swing, it makes more sense to look for some kind of a healthy correction. But again, we'll have to be patient. We'll have to see what's happening here. In terms of gold, what's going to happen in gold? So gold's completed our primary move. What we talked about, this was the black rock top, everybody getting excited at gold at those 1300s, and our range hasn't changed. We talked about the range was 1300, 1250, 1200. And expectation was that if we couldn't break above these 1300s, and as the market was showing us, unable to attract new buyers on all these attempts here at highs, we were looking for the market to come back into the 1250, which was our pivotal line, and daily close below this moving average at 50 moving average in the 1250 to give us more conviction that we were coming back into the broader support zone, which was basically this 100 DMA with the 200, 1200. So that's done and dusted. Right here, it's all about equities. We'll have to see what happens, but this is a very key level. Daily closes above or below. This is similar to, 1200 is essentially 2100 on the ES. So daily closes above, get a little bounce back up. Daily closes below, heavy, and we'd expect this 200 DMA to be attracting. It's all about the 1200. Don't get stubborn into, slow flows, but, very nice action on a gold too. What's happening? Silver is being very slow, but still very nice inside the range. We've been talking about this range for a couple of years, pretty much. 18, 16, 14, right? See all this basing coming back up. We complete black into those highs, negative daily close at highs, coming back into mid, right? So look at this 1600. Daily closes above, bullish, daily closes below, bearish. Not a lot has changed, but we're still stuck inside this broader range. Being very, very slow. Aggressive intraday here and there, but, painful one to hold if you're looking for bigger moves. Crude, what's happening on crude? So crude, we were discussing the fact that, we're looking for this upside rotation to continue, right? Had very nice action back into the top of the channel. As far as I'm concerned, the bullish rotation here is finished. We're talking about the fact that we had a lot of different and interesting resistance zones into these highs, right? And that we expected that even though we'd likely need to fail from a little bit of a higher level, we like this area to ultimately cap for a healthy correction. Now, it doesn't have to be a correction all the way back down to 25, but at least we'd expect some kind of a move back here, and then we'll see if we're going to go higher or indeed this channel is going to continue to be respected and essentially we're going to print back down. So constructive here on the daily close. Looks like sellers are coming here. We think if we get a daily close back above the 51s, then it'll start to likely be holding bullish and we could extend higher. But as long as we don't get daily closes above the 51, we expect it to put in some kind of topping formation here, try to put a daily close below the 47 and extend back into the 43s. So that really hasn't changed in terms of our outlook on crude. What's happening on cable? Cable, again, we like the extremes. Very nice failure into those highs. I mean, we got very nice action. Actually, if you go back and look at it on the chart here last week, we had these failure at previous day levels on a 5-minute, 15-minute, 1 hour, 4 hour daily. They all closed negative and then it started to roll. So here again, as always, it's trading on Brexit and it's a tricky one, but all things being equal, we consider this double failure at highs, right? And we would not be surprised that, as we've been saying for a long time, as we approach closer to even the vote, that we're somewhere inside the middle of this range, more neutral territory. But for now, as long as these highs hold, from a daily close perspective, we'd expect this to try and continue to come back down towards a more neutral territory in the middle of the range. Now, keep in mind that this week it should be fairly interesting, especially because, you know, apart from all the PMIs and GDP data out, we've got Mario Draghi in the House on Thursday, right? We've got a bunch of speakers across the board. We've got Carney speaking too, but also on Friday we've got the non-farm payrolls, okay? So it's an interesting week shaping up. If you look at CHF, again, finished. You know, these are all those moves from those 3rd of May pretty much, right? When we talked about it a lot on Twitter too, that as far as we're concerned, the USD had put in an intermediate top or bottom depending on what pair you were looking at, you know, and these moves are completed, right? Nice little move here, back into this level, and then back, finished. Clearly here it can continue to go back into the top side of the range or come back down, but as far as we're concerned, these primary moves are done, right? Very nice action on Swissy too, and you know, also across the board. Yen, nice little hold, and it's coming back into a more congested area, which is going to be very, very interesting to see how we trade here. As long as we start getting sellers and daily closes back below the 111, then this could start to stabilize. But if we start to get daily closes back above this level, we start piercing here, then there's a very good chance that the market is going to be attracted all the way back into those 115s, as we've been talking for a long time. So really no change of outlook for us on yen either. And I think the market has given everybody a very, very clear example of what we always talk about, right? The market tends to, you know, we like to focus on when the market moves in a healthy manner. What happens 80% of the time, not 20% of the time. Every now and then it'll get out of whack and it'll tend to move in, you know, in an extreme fashion one way or the other. And that's usually where people either lose hope or get excited and they think it could only move in that direction. But usually the more extreme we move in one direction, the more extreme the correction comes when it comes. It's not a question of if it's going to come, it's just a question of when they do happen. So all those guys getting uber bearish, trying to short yen into the lows, it's dead, it's dead, it's dead. Not so pretty. All those guys getting long on silver after we moved aggressively from those 14s into those 18s, well, guess what? Two sides of every coin, what goes around comes around. Just anyway, I'm not going to start to rant about that today. And on euro also, you know, our move from the 3rd of May, we consider that finished too in terms of primary, right? Failure here, we're looking for a move back into the opposite side of the channel, into this multi-confluence zone of these lows, 100 and 200 DMA. So as far as we're concerned, our primary move is short. If anything, we think it'll be healthy to find some kind of bounce here. On a break below, daily close below the 200 DMA, then those 1050s attract. That hasn't changed. This was our extension target on this short trigger on 3rd of May, but the primary move was back down here. So we're looking at this from a daily close perspective. Keep in mind that as long as we hover inside the 100 and the 200, it'll likely stay very, very choppy. Daily close below, look for 1050s. Daily close above the 100, look for it to start to attempt closing above the 112, and then we could be back into bullish rotation in this channel. Okay. So guys, as always, thank you so much for listening. Thank you so much for flying with 50. Thank you for all those likes and shares. You know, it's the only way for me to really know you're enjoying the content and to try and put out more. But again, I hope everybody has an awesome weekend. I'll see you guys soon. Take care. Bye-bye.